Taxes are going to be one of the largest expenses of your life, and whilst you have to pay it, there are many ways in which you can reduce your tax bill legally. So in this video, I'm going to uncover what they are and how you can keep more of what you make. This video is a highly requested one. I asked you in one of my recent videos if you want to see this video on tax that I had planned out, and out of the 1,000 plus comments, 95% of you were all for it. As a disclaimer, I am a qualified accountant, but I am not a financial advisor. I'm just educating you on the possibilities of what can broadly be done wherever you live. But with this information, you need to find out what is relevant for your own country and seek financial advice in the country that you're in. Right, if that introduction didn't give you enough time to click off, then you're here to stay. So let's get into it. I'm going to be bold and assume you have zero knowledge about taxes. And so I'm going to cover the basics, the misconceptions, and then build it out from there. I've got everything timestamped in the description below, so you can click to whatever part that interests you the most. And there'll also be follow-up videos to this as well as we get more and more into the details. Let's start with, how is income tax calculated? There is a common misconception that the more money you make, the higher the tax rate you'll pay on your full salary. And so I was speaking with someone last week and he was saying how he doesn't want a pay rise because he's currently at the 20% tax bracket, and if he gets a pay rise, it will move him into the 40% tax bracket, so he will end up making less money. But this isn't exactly correct. Most countries have tax brackets, and these tax brackets are different depending on what part of the world you're in, but they apply in a similar way using a progressive tax system. So what that means is you get taxed on the next pound or dollar of income depending on what bracket that next pound or dollar falls into. So say you had the following tax brackets in the country that you live in. If you're an employee earning 60,000, that means you fall into the 40% bracket, but it doesn't mean you're paying 40% of that full 60,000 in taxes. What it actually means is that for the first 10,000, you're not paying anything in taxes. Once you max out that bracket, you move into the next bracket. So you're paying 20% rate for the next 40,000 until you max that out. And then you move into the next bracket, which is 40% until you max that out. But in this case, it's just the remaining 10,000. So if you're making 60,000, according to these numbers, you're paying 12,000 in taxes. This is broadly how it works. There are some nuances and you want to check for your country what those nuances are. For example, in the UK, once you hit six figures as an employee, then you start losing that tax-free allowance. So you're effectively paying even more away in tax. Now we've covered that, let's move on to how you can reduce your taxable income. One of the easiest ways to reduce your tax bill is through pension contribution. Pension contribution is called different things depending on where you are. It's the 401k if you're in the US, so you need to check what it's referred to in your respective country. What's the idea behind this? If you're an employee working for a corporation, you are getting taxed straight away as soon as that money comes through the door. It is getting taxed before you even see it. But with a pension contribution, you're able to put a portion of your paycheck away into your pension pot, and then you'll get taxed on whatever is left. So the end result will be you pay income tax on a smaller amount, and whatever money that is in your pension pot will be invested with tax-free earnings. So say your salary is 60,000. If you weren't putting away anything into your pension and assuming no other deductions, you'd be paying 12,000 in taxes, as we spoke about earlier. Now, say you decide to instead put 500 a month of that into your pension or into your 401k every month. So that's 6,000 in the year that goes straight into your pension pot without getting taxed. And so your taxable income, instead of it now being 60,000, it's 54,000. So instead of paying 12,000 in taxes, you're only paying 9,600. This is even better if you have an employer that has a match contribution system. And so for every pound or dollar that you put in, they do the same. This is free money that's also tax-free. On the flip side, on the downside, however, this money is locked away and you can't access it until you retire, although there are things you can do, like borrowing from it to buy property, for example. But generally speaking, this is you saving away until you retire. If you are in a position to contribute to your pension and you don't necessarily need that money at the moment, this is a really good way to reduce your taxable income and therefore reduce the tax that you pay. The next way to reduce the tax bill, and this is one that I briefly touched upon in my Bad Money Habits video, is to make sure you're earning through the right structure suitable for your position. And in this case, we're talking about as a company rather than as an individual. And this really applies when you have a side hustle or a business. So for example, I'm here speaking to you as an individual, but I'm operating as a business. So the way I'm getting paid from sponsors, from affiliates, from YouTube, is through a company that I've set up. And all I needed to do was firstly set up a company online, and secondly set up a company bank account. So all my invoices have my company bank name on it. So as an employee working for a corporation, you earn, you pay taxes, and then you spend whatever's left. So if I'm earning 60K, I pay 12k in taxes, and then I have 48,000 left to spend. Now, say I earn the same amount through YouTube as a side hustle. I earn 60,000. I'll then deduct my expenses. So that can include a wide variety of things. It can include my camera, my mic, my laptop that I use to edit, a portion of my electricity bills for this room as it's my work from home YouTube or studio, courses, meets. There are a lot of things that you can expense, which you want to speak to your advisor about. And then you pay tax on the remaining amount. And on top of that, the company or the corporation tax rate isn't the same as the income tax brackets we saw earlier. And in most Western countries, it's a lower rate. And in the UK at the moment, it's currently 19%. So as long as I keep this money in the company, I won't be paying any income tax on it. I can keep spending on business stuff and investing through my company and deducting it as an expense. What I can also do if I wanted to is draw myself a salary. But the moment you draw money out of this company is subject to those income tax brackets we spoke about earlier. So you want to structure this in a way where you stay in the lower threshold and reduces the overall tax that you're paying. The next way to pay less tax relative to the amount you make is by earning money through streams that the government views as non-taxable. One of the most simple but effective ways to do that is through investing via a stocks and shares ISA. This is called different things in different countries. In the US, it's a Roth IRA, and this is essentially an investment account that shields your profits and gains from the taxman. And I'll show you how to set one up in just a second. So just to clarify, this doesn't reduce your taxable income this year, but you get the tax benefits on the back end when you pull it out. At least this is the way it is right now. If you're in the UK, you may have seen the recent headlines that Jeremy Hunt is looking to introduce some new rules around this tax-free saving. We'll wait to see how that pans out. But in the meantime, I'm currently maximizing out my ISA allowance as much as possible in the meantime. There are a number of investment platforms you can use, one of them being Trading 212, which is an investment platform that I've used for the last 4 years, and they're also sponsoring this video. This app has the typical things I look for, and that's firstly, that's regulated. In this case, it's FCA regulated. It has an automatic investment feature, which makes me a lot more disciplined with my investing. And thirdly, I can buy fractional shares with zero commission. If you're new to investing, then I have an ultimate beginner guide to investing, and I'll link that here for you. But what I like about this investment app as well is that it has a practice mode and a real money mode, which means you can start investing and practicing to invest with fake money, with pretend money that reflects the current markets. And then once you're ready, you can move into the real mode.